Dan Frishberg, Rich Peterson, Matt Zeal with me here on the floor. We're about to wrap up, Dan, the worst January ever. And I feel like each month that passes, I can use a superlative that's some version of that. Do you have any more optimism to buy equities today than you did a month ago?
No, I have no more optimism to buy equities. But I have more optimism that I may want to buy some in late spring now.
Why?
Because I don't see the selling pressure. There's no real demand, so I'm not going to get a bull market right now. But the intense selling pressure isn't really there. We do what we call a market X-ray. And the selling is going away. Now, the next time we go back down, probably going to get that, I hate to use technical terms, but you're probably going to get that divergence where the price goes down but not as much selling pressure. And that's where you could actually get a real rally from. That could be the spring.
Matt, you agree with what you just heard? In other words, A, are you any more interested in buying stocks today than you were a month ago? And if you're not, what do you need to see?
Always interested in buying stocks of companies, well-positioned companies that are in our valuation range, poised to take market share. These days, of course, the stock market is terrible. The economy is terrible. GDP this morning was terrible. However, what you see is many companies that are starting to really show their true colors, able to gain market share, able to, by virtue of their management quality and financial strength, outposition competitors and either grow sales faster or shrink less than their competitors.
For instance?
Always. Advanced Auto Parts is an example. As a small cap manager in particular, this is a company, #2 auto parts maker, was out of my market cap range. Market's down, back in my market cap range. This is a company that's starting to benefit from a management change a year and a half ago. Senior management from Best Buy is in, improving margins. Secondly, most importantly, the weak economy is going to make miles driven on cars longer. Older cars need fixing. It's going to help drive revenues relative, and it's picking up ground against competitors.
Rich, on the earnings and analyst front, are you seeing at the very least a deceleration in the rate of earnings expectation cuts? In other words, we're seeing these huge slashes in earnings expectations. Are you seeing that at the very least slow down?
You know, what we're seeing basically in general is a lot of fatigue. We're seeing just a lot of, since that September bottom of 750 or so, the S&P was several bounces along the range. But in terms of earning expectations, again, materials, consumer discretionary, the financials, just showing horrible numbers. Some gains in consumer staples and healthcare, but the fact is, it's very selective. You had winners with Apple, with IBM. Not so with Microsoft. So it's really, case-by-case situation.
One of the most popular trades, it would seem right now, for those who are worried about the deficits and worried about how the money that we're spending, printing, however we're getting it, is some gold trade or maybe short treasuries, because you think that's... What is your view on either a short treasury trade, because you think eventually people will have to leave, or for that matter, long gold?
I am short treasuries, but it's a spread. I'm short treasuries and long corporate bonds. I don't want to guess the direction of interest rates. I know they have to converge sooner or later. So that I like that spread. Gold, as long as you don't know who they're going to throw under the bus next, you don't know what the rules are going to be, gold goes up because we lose confidence, the government is incompetent, they don't seem to, that's when gold goes up. Remember, it went up with Nixon and Carter, it goes down with Reagan, and you get confidence now. We weren't happy with Bush, they don't look like they know what they're doing, the Paulson trade, gold goes back up again. If they start to look like they know what they're doing, have some confidence, then you'll start to see gold go back down again.
Give me one more name while I've got you, because we're going to come back, but it's going to be a bank conversation. I'm curious what else you'd like to your conversation.
Something that's not a bank, consumer staple, Raw Corp, largest private label cereal maker, recently bought the Post cereal brand from Kraft. They've got a couple things going on. First of all, in a weak economy, people trade down to private labels. Secondly, they've got good earnings synergies, cost savings opportunities over the next couple of years from that acquisition, because they're now a solid #3 player in a very mature, stable industry. Very good visibility in this kind of economy.
All right, listen, we'll come back. We'll talk about good bank, bad bank, nationalized the banks. Are they nationalized already? I don't know.